What's going on, everybody? It is Tuesday, November 28th, and let's get into our review of today. Review of our trades, go over a few setups, and talk about a few other things. So, good day for the market today, guys. A nice green day, pretty much all around the board. S&P 500 here, up almost 1% today, breaking out of this squeeze on very big volume. So, definitely a nice move there, and despite what we may have thought going back a few weeks or a month ago, it's crazy, but this trend, this upward trend in the market for the time being is just clearly not over. So flip over here to the Qs. Pretty quiet over here today. Technology stocks in general, which are basically the Qs, are very overbought. So I wouldn't expect to see that match the S&P 500 point for point per se, but nonetheless, technology is still ripping and roaring, and things are looking good, guys. So something I've been focusing on lately, and the more I focus on it, the more just trading in the markets are actually starting to just make sense. I'm seeing things a lot clearer, and what I've been focusing on lately is sector analysis. So for those of you that don't know, a sector is just like, groupings of different kinds of companies. So, there's a technology sector. All the stocks that make up that sector are technology stocks. Think Apple, Facebook, etc. So, what I've been focusing on is finding opportunities in sectors. This is a good example. So let's just go right off in this example right here. So this is a consumer discretionary sector. That stocks like Home Depot, things like that. So, as you guys know, I've taught you this, for a while now. Stocks move when, money comes in. Volume moves price. It's just at the end of the day, it's a game of supply and demand, and that's as simple as I keep it. There's something in the markets called sector rotation, and what that means, and it's to put it simple, sector rotation is money, from institutions, guys, because remember, the guys who control prices and move the markets, that's Wall Street, hedge funds, mutual funds, Goldman Sachs, places like that. During the course of the year, there are going to be times where, they're going to rotate large amounts of money from one sector to another. Now, sometimes it happens on a very large scale, like the technology sector. You can see just by, blowing out this daily chart, money's been coming into, technology for a while now. Not every sector rotation is going to be as strong as that, but, as a general statement, so let me just show you guys the entire year here. Where are we? It's been the year of tech, and, all of you guys who've been trading with me every day, when you step back, that's pretty obvious. We pretty much have been, discussing at one point or the other, technology stocks all year long. So why is that? Why do we continue to see technology stocks, setting up for good trades? Well, it's because money's just been pouring into the sector all year long. So, maybe 3, 4, or 5, times a year there will be, major sector shifts like that. But what we can, really take advantage of is, these short-term swings, in sector rotation. So here's a great example, guys. The consumer discretionary sector, basically trading sideways here. Call it 5, 6 months now. We had a great squeeze here, so I'm gonna walk you basically, through my process. Step 1 is that I go through the the sector ETFs, and tomorrow morning I will email you guys a list of each. So that's step 1. So we can run through some of them right now. Consumer discretionary sector, XLY. A little bit extended. XLK, which is technology sector. Again, pretty extended as well. Take a look at energy, which is XLE. And you can see, it came out of a squeeze here on a great move and has basically fell and consolidated since. So that's energy. XLF, which is financials, and you guys get it. So that's step 1 of this process I've been embarking on. What am I looking for in these sectors though? I'm looking for squeezes. So the same thing I'm looking for, in stocks, which you guys know is a squeeze. I'm looking for the same thing, in sectors. So let me take you back to my Home Depot trade from last week. Step one of the process was that I identified that XLY, which is a consumer staple, consumer discretionary sector, was in a squeeze going back here. So guys, for me, that is step one. Which sector is squeezing, and what does that mean? If the squeeze breaks, it means, money, in which it happened here perfectly, is likely to come into that sector. So that's step one for me. Where is the sector that's squeezing? Step two is to then, for me personally, step two is that I then look across, the top 5 or 10 holdings in that sector. And what I mean by that, guys, is, these ETFs, these sector ETFs, they're weighted. So, just to give you an example with some names you guys will know, to make this very simple, when you buy a share of XLF, which is the financial sector, you're really getting, and I don't know the exact numbers, but, 1/10 of a share of Bank of America, and, 1/10 of a share of Goldman Sachs in Citigroup. And you guys get what I'm saying. And, some individual stocks hold more weighting in a sector, like Bank of America and Berkshire Hathaway, those are two of the bigger holdings for XLF. So, why is that important and why is that worthwhile to know? If a sector is in a squeeze, guys, and it breaks that squeeze, money, of course, therefore comes into that sector. So by default, and this is important, when money comes into a sector and a sector moves, by default, because the sectors are weighted, the leading stocks, the most heavily weighted names in that sector are going to move as well. And again, if people, if institutions are gobbling up shares of XLY, by default, names in that sector are going to go up. So step one was for me to identify this here sector in a squeeze. And then step two was to go through the names in that sector and look for, a top holding that was also in a squeeze. And that led me straight to Home Depot. And again, guys, if I'm going to continue to make more videos on this, but when you start to look at, a stock in a sector, look at that chart and the sector itself, it's pretty crazy, just the reality that they move together. So Home Depot, a heavily weighted stock for, XLY in a squeeze. And of course, as was the sector. So I'm seeing that right here. I'm seeing the sector in a squeeze. I work through the list of, top 10 or so holdings there, and look at that. You got the sector in a squeeze, and you have one of the bigger stocks in that sector also in a squeeze. So that means, by default, if XLY, the sector, were to have broken that squeeze, the leading stocks in that sector follow along with it. So it worked out perfectly, guys. I was stalking this, waiting for that to happen. As I was watching this, I'm in the leading stock, which is Home Depot, building my position on a daily basis. And of course, on the day that the sector itself broke out, Home Depot did as well. And I closed that trade last week, and that was a $3,300 profit. So that was cool, but of course, we continue forward. So, which sectors this week or going into this week have been my focus? Very clear that, financials are in a squeeze now. They kind of fell apart, found some support, and they're squeezing. So, guys, where's my little drawer and shit? What am I doing? Okay, so, bear with me. There we go. Guys, when you see this, when you see a sector in a squeeze, especially, a strong sector like financials, financials are a huge part of this market. When you see that, you need to then begin, and I'm not talking about today, I'm talking about over here when the squeeze starts. What you need to then do is start to just look within that sector for stocks that are in a squeeze. And of course, some of the bigger names in that sector are Bank of America, Citigroup, and they're all squeezing. They were all squeezing right along with the entire sector. So Today, I had about $2,000 of open profit on the day, and they came from these names, and they came from a result of the financial sector finally breaking its squeeze. I identified the sector in a squeeze, guys. I then found leading names in the sector to monitor, took my positions, and then when the sector itself broke out, they did as well. Today was a huge day between Bank of America, Wells Fargo, I took that as well, and Citigroup. My open profits for today are $2,300. And another example, guys, the healthcare sector is another sector I've been watching. Why? Because it was in a 195 squeeze. It's broken the 195 squeeze and is already broken out of the daily squeeze as well. So let's walk through it again. What is my process? I've identified that we've got a sector in a squeeze over here. Okay, that's obvious. Step 2 for me is say, hey, who are some leading names here? This is one of them. Didn't work out today. And this is another one, UNH. Big squeeze here. Took my position. And as you guys can see, when the sector broke out, the stock began to make its move as well. So tomorrow, if the healthcare sector can continue this kind of move higher, most likely, other than an individual situation with this company itself, UNH by default is going to make a move as well. So I'm going to go much more into this on much more detail. But again, guys, going forward, this is my focus, and it's my focus because this year I'm trying to turn, it's almost 40 now, but trying to turn 30,000 into 300,000. For me to do that, I need to take very focused and good sized positions with institutional money, basically the wind at my back of Wall Street. And for me to do that, it's going to start with the sector analysis. If I can just focus on these kinds of opportunities all year, I know I'll reach my goal. So again, guys, step 1, find a sector in a squeeze. You had an entire month to realize, hey, we got a squeeze in the consumer discretionaries. Step 2, go through the leading stocks, which I'll send you guys this list in that sector. You find one in a squeeze, wait to take your position, build your position regardless. When the sector breaks out, the stock itself, if it's heavily weighted, breaks out as well. Financials had a huge day today. The sector broke out. Basically every big time financial stock had a huge day. Bank of America up almost 4% today? Yeah, you can't see it. Put that down for you. Almost over 4%. So that's my focus, guys. And my focus is to, every time, an opportunity like this comes around, a sector move, just to continuously, up my position sizes. I'm getting closer to the point where, my average positions are probably going to be, 5,000 of risk. And I would like to reach that point where, they're $10,000 of risk. And that just requires a lot of focus. And for me, this is the focus going forward. It just makes sense to me. If supply and demand moves prices, if you can identify exactly, not just, generally, but if you can identify exactly which sector that demand from Wall Street is going into, it just seems like a good formula to me. So that's going to be my focus for the year. It's something that, those of you who have signed up for the 2018 challenge are going to learn and focus on heavily as well. For those of you guys who don't know, the 2018 challenge is it's a small group of traders that I'm going to work with, basically hand in hand for all of 2018. And, the focus is really for those of you who are looking at some point to make, trading your full-time career and live off of your trading profits. I've been doing that for 3 years. I'm still learning every day, but I would love to work with, a small group of you guys for the entire year and really, elevate your trading to the point where you make incredible progress and just, further approach, that dream, which is for many of you to trade full time. The price to enter the challenge, because I want to keep it smaller, is $300 for the entire year. As always, you got a money back guarantee, and that includes, our live, meetups twice a week, which will be done via online, mentoring sessions, one-on-one with me, and a lot more. So more to come on that, guys. We already got a few people signed up, and we're going to start with that on the 1st of December. But sector analysis is my focus going forward. And now let's look at some charts that you guys sent my way this evening. All right, so AMAT. Take a look at this for you guys. I like it, guys. You know, very strong uptrend. Good looking squeeze right here on the daily. Looks like we just broke out of a failed 195 squeeze, but the daily is still intact. Looks like volume was coming in today. I would definitely keep an eye on that one to see if you can get some higher than average volume and take a position, because that looks pretty strong. I know Chris wanted me to look at Baidu, and this is interesting because though Chinese stocks have had a rough time lately, it looks like maybe we've kind of found some support, and it looks like a squeeze is actually starting. So my preference would be that this kind of squeezes for another week or so, and then I'll definitely be all over that. So that looks really good. And I think one of you guys want me to look at Amgen as well. So these kinds of opportunities are interesting. You got a stock that was very oversold, kind of found some support and is now in a squeeze. And if you kind of see that buying continue to come in, I prefer this over trying to catch a bottom. I kind of prefer to let the bottom actually form, which it looks like it did here, and then wait for that volume to come in. So you got a 195 squeeze, the blue dots here, and of course the daily with the yellow. I like that a lot, and I would continue to watch that. So that's it, guys. I need some sleep. I am sick as hell, haven't eaten in 2 days, but we carry forward, and I'm looking forward to tomorrow. And again, sector analysis is where my focus is at. Great job today, guys. A lot of you guys, sent me some screenshots of your profits, and as always, that's the kind of shit that makes my day. So back on track, and I'll hit you guys up tomorrow night with another video. Peace.